In this video, we're going to build together a viable income trading strategy on Nikkei. Nikkei has been a fantastic performer the last 3 years, and I strongly believe it still will be a great performer in the 2026. So there's a lot of income potential. And I'm also going to show you how to build a viable strategy quite easily and quickly. You will see that creating viable and robust trading strategies does not need to be complicated despite the common perception or belief. So let's get to it. Hi, my name is Thomas, also known as the Mr. Breakout. I'm a breakout trading specialist and an internationally recognized trading author. I've traveled the world trading breakout strategies, and on this channel I will teach you my own way of finding the right trading opportunities and making real money with breakout trading. Welcome back, everybody who just loves breakout trading or trading in general, and also everybody who's too busy to spend too much time building trading strategies and want to learn how to do it easily and quickly. And also everyone who doesn't know how to build profitable breakout strategies. So everyone, welcome, and let's get to it. So we're going to build together a viable breakout trading strategy on Nikkei. By the way, Nikkei, it's a fantastic market, really strong performer, really good and tradable trends. I've already talked about Nikkei a couple of times on my channel. Now we're going to use BreakoutOS, which is actually the fastest and easiest way anybody can build income trading strategies. Let me just dive directly into it and show you how we will do this together A to Z. So we will use the module which is designed to build robust and viable foundational breakout models. And let me start by quick explanation of the breakout trading concept. I already explained many times. There are so many videos on my channel, so you can get back to the channel and watch more. But overall, this is the universal breakout formula which works on any market. We need point of initiation from which we calculate space, and that's where we calculate where to place a stop order, where to enter a trade. And then we need to use also some time filter, because time always plays a big role in breakout strategies building. And on top of that, we can also put some filter. So I'll show you everything step by step. Let's get to it. So first of all, I will load up data. I will load up Nikkei 60-minute data. 24/5 means that it's 24 hours Monday to Friday. Okay, so this is just regular trading data, and I exported this from the TradeStation platform, which I use for trading, but I believe there are multiple other sources or resources where you can get data like this. It's up to you. Ask ChatGPT and do some research. And as you can see, we have hourly data on Nikkei Monday to Friday. And what I did, I also added a calculation of few simple metrics. So let me actually start from the end. So I added average true range with period 5, 20, and 40. And this is all automatically generated by TradeStation, but you can export similar data from your own platform. Again, consult with ChatGPT how to do it, or you can even build this in Excel spreadsheet. Very simple, very easy. Again, we now have AI. It just can fill up these gaps in data very quickly and easily. It's up to you, do the research and not be lazy and learn how to do this properly. So we have average true range period 5, average true range period 20, average true range period 40. And all these will be for creating the space, okay? So this is how we will create where actually put the stop order and where the breakout should occur. So let me actually again show you what I mean. So we choose some point of initiation, which I'll show you in a second, and then we use multiplier of average true range, like average true range 40, which I just shared with you, and then we place a stop order where to enter the trade. So again, very, very simple. So we have just three different ATRs. We don't need more. This is perfectly fine. This is just like fast one, medium one, and slow one. You don't need to optimize this anymore. And then we have point of initiations. That's from where we calculate the breakout itself. So again, I use something very simple. I want to show you guys, you do not need to overcomplicate this. Like seriously, even with super simple stuff, which I almost threw in randomly, you can build viable income breakout trading strategies. It's not a brain surgery, just common sense and knowing how to do that. So I used exponential average, exponential moving average with period 50. I use low of the day and high of the day. So as the market is progressing during the day, it creates low of the day and high of the day. Now, for guys who think they are too smart to already right now saying, oh, there's a look ahead bias because you're looking into the future and you already know where it is. No, that's not true. You're just being too smart and don't understand how TradeStation works. TradeStation works very easily. It updates the low of the day and high of the day on every single bar as it's progressing. So it's actually, there's no look ahead bias. This is a normal progression of low of the day and high of the day. And then we also have moving average with period 100. We have open of the day. That's when we opened. 0 means of today. And we have yesterday's close. So again, this is super simple, just few point of initiation, and basically any of these can easily be used as point of initiation. So you see here we have a summary, 3 different ATRs period and point of initiation, yesterday's close, today's open, moving average period 100, high of the day, low of the day, and moving average exponential with period 50. Now, why these periods? Completely random, guys. I'll be honest with you. Like, again, I want to show you it's simple, it's easy. You don't need to overthink, overcomplicate. Oh God, I'm so tired of seeing traders like overcomplicating, overanalyzing, overthinking everything. Keep it simple with just few elements. I'll show you, you can build a good, viable income trading strategy. And what we're going to do, we need to prototype our models. We need to prototype our foundational breakout models, and each model is basically a combination of point of initiation, space, and space is defined as average true range multiplied with some multipliers. So we will test automatically. The BreakoutOS automatically just uses multiplier 0 to 5, step 0 2, and that's how it prototypes foundational model, and you'll see it in a second. And by the way, on this channel is a complete masterclass on creating breakout strategies, so just go there and watch them. Now let's focus in this test, let's focus on the regular trading hours. So basically the regular trading hours, the Nikkei I'm testing here is it's traded on CME US market. Although Nikkei is Japanese, it's traded on CME, and this is Chicago time. So in Chicago, all the main indexes trade about 8:30 to 3:15 p.m. So if we just said that we want to allow entries between the regular trading hours, that's one approach to go. There are other approaches. We can focus on the entire session, pre-market, after-market. We can cover all these in some other sessions in the future. Don't forget to subscribe, by the way, because I cover strategies and development like this every single week, so we can get back to more advanced stuff in the future. And we want to create a day trading strategy, so we just check, we want end of the day exit, and let's do end of the day exit 11 p.m. or midnight, doesn't matter. It really doesn't matter. It's just a small nuance. Again, do not overthink it, do not overcomplicate it. And now we test and create our models very quickly. We just press the button and the BreakoutOS will create models, like a lot of different models. As you can see, One model is, for example, this one is exponential moving average 50, 3.6 multiplier of average through range 20. So it's a simple model. Now what we need to do, we have to make sure we have a robust model. That's the most important thing. In profitable trading, everything is about robustness, everything that's A to Z. So we really have to make sure we have measurements in place to really make robust strategy. So we start by actually splitting the data before last 3 years and the last 3 years. Also, this is called in sample and out of sample. And right now we're only seeing models before the last 3 years. What does it mean? It means that we take, oh, by the way, I forgot to mention, this is 10 years data history. Okay, so this is 10 years data history. What we did here, we just split it last 3 years and before last 3 years. And last 3 years, why this is called in sample, out of sample. We build on in sample and validate on out of sample. Why last 3 years? From my vast experience and knowledge, last 3 years are way more important, the most important than thinking like 10%, 20% in sample, out of sample split. Just last 3 years, especially in indexes and futures markets, the most important. So that's why we have before and last 3 years. And now we can see different models, and actually we see like what the model looks like. We are now sorting out by the best and highest net profit, and you can see this model has got the highest net profit. So it's basically making about $331 or about $4,000 a year on average. Now these other light lines, these mean that these are the other spaces like 3.4, 3.2. And what we want to do, first of all, we want to pick a module, or foundational model, which actually produces good amount of profitable strategies with different space like this. So here the best one is 3.6, but 3.2 is also profitable, 4.4, 4.6, etc. And here actually, so we can see like how many we have profitable, and between these two models, definitely this one is better because it's a smoother equity curve, and we have about half of profitable other parameters, like the parameter fraction, which is here the space for. So here 4.4 is profitable, 4.2, and many others. So this seems to be quite good model. Let's have a look now. This is in sample, and now let's validate the out of sample. And as you can see, out of sample is beautiful. So this is the last 3 years, and this is, we reveal it. It's beautiful. So it actually proved, it passed the first very important in sample out of sample test, which is in sample out of sample. So it is the first robust test. So the first robust test has been passed. So this is a viable model. Now, second viability test or robustness test, we need to check the neighbor values. So basically 4.2, 4.6 also should produce good results. So let's have a look. These are the neighbor values. 4.6, beautiful, if not even better. 4.4, beautiful as well. So as you can see, now I forgot which one was the initial one. Was it 4.6 or 4? It was 0.4. Okay, so as you can see, 4.6, let me get back again, 4.6 and 4.8, like doesn't really matter, right? Like we can actually pick any we want. 4.4 profitable. Okay, we can pick 4.2 profitable. This is amazing, guys. This is really screams robustness. Okay, so this already is another good check, and we are on the right track. By the way, we can also visualize some of these. So yeah, pretty good entries, all looks good. I mean, like there's nothing that would be a red flag. This is what the trades look like. This is the point of initiation. There's no stop loss, but the platform visualizes what it would look like, where would be the stop loss if we would put it on the point of initiation. But stop loss is not being calculated right now. This is just visualization. And this is the breakout level point. So far, so good. So now we need to check robustness test. And we actually have a couple of different checks. So the first one is we need to pick, like, this is something you need to watch in the masterclass. So please go back, and I explained this in the breakout trading masterclass. There's 3 parts on this on this channel, but overall this is a walk forward analysis, and the walk forward analysis basically tells you what would be the rank of the selected 4.46 space overall and then in the future. And by the way, I think we have 4.4 actually, or 4.2, wasn't it? I don't recall right now. And we can see that the score of walk forward, the highest one, is 4.2. So that's actually the one we should trade. And we can see that with walk forward, if we would walk forward without seeing the data into the future, and again, you need to watch the masterclass, that's quite a lot to explain, that we would continuously rank between first and fifth best solution. So overall, like 4.2, it's a very, very strong parameter, which basically, yeah, that's the number one, which basically, even in walk forward, and listen, I know this is not a typical walk forward, you're used to it, you need to open your mind, you need to get back out of this mindset, oh, this is how it's done, you don't understand. This is done differently, okay? Like if you're, especially if you're not getting trading results, you're probably stuck in some old obsolete mindset and you're not open to new and better ways to do things. So if you want to understand why this walk forward looks completely different, watch the masterclass and learn something new, something that actually does work. Okay, so 4.2 is actually number one in walk forward, very strong performer. And if we check the robustness index, which is a proprietary index in the Breakout OS, we can see it's 77% out of 2. 77 means good robustness. So we have a good robustness, and we also check the recency. So the recency, 97%, that means we have a strong recent performer. And that's always important. I told you, like, the recency is the most important. If we have a good momentum in the recency, last 2 years, 2 years, 1 year, then there's a very good promise it will continue. Okay, so recency is important, and in BreakoutOS we see the recency is 97%. Fantastic, everything is screaming high level of robustness. Okay, so very, very good so far. By the way, you can also visualize the pseudocode here. As you can see, the pseudocode is super simple, like there's nothing complicated. Very, very, very simple strategy. You can just grab a screenshot if you want to and have a look. This is the first part and this is the second part. There's a complete code which you can just copy paste for TradeStation, and more coming probably in the future, NinjaTrader or AMA Broker or other professional platforms. So again, if you can anytime just copy paste this, give it to ChatGPT and tell, hey, translate it for whatever platform you use, and it will regenerate for you. So again, nothing complicated. All right, so we have a robust winner, not bad, okay? $300 per contract per month. I mean, you need to also understand this is not a huge sum, but we're building model after model. Once you create 5-6 module like this, you get easily to 5,000 per month on average. So you need to start with one module, create more modules, low correlated different markets, and then put them together into an income profitable portfolio. So now we pick this one, and actually, as you can see, it's a very promising, good strategy. So let's see what stop loss we would use, and let's actually do small optimization. Let's actually, we can just do like stop loss like this, just simulate, or we can just use optimization. And actually, we don't actually need to use optimization. We can just see that to match the outcome, actually stop loss, this is just a protective stop loss, and probably somewhere around, I don't know, roughly 2000 would be the protective stop loss. Now, this is not the final stop loss. We did not implement any indicator yet, but protective stop loss would be probably about $2,000. This is just protective. This is just to manage well your risk management. You can see in statistic it would actually be only triggered 3.6% of the time. So it's really highly protective stop loss in very dangerous situation like, I don't know, your platform crashes or market crashes. So you need to have a highly protective stop loss in place. Again, triggered during last 10 years, triggered only 3.6% of time. So that's not bad. And now we need to do another robustness test. And I told you guys, everything is about robustness testing. Robustness. Make sure your models are robust, and then it will be easy to make money steadily. So how do we do the last check? We do this in this validate phase. Where we basically load other markets and we cross-validate the model on other markets. So what I'm going to load YM, which is E-mini Dow Jones, NQ, which is E-mini Nasdaq, ES, which is E-mini S&P, EMD, which is E-mini S&P 400, and RTY, which is E-mini Russell 2000. And if I load up, sorry, probably wrong button, this one, at markets. If I now load up all these 5 markets, it will automatically cross-validate on these markets. And now bear with me, guys, this is very important. Cross-validation should be done not on completely different markets. We do not want to cross-validate on Forex or something like that. Like, we need to be reasonable, and our models need to be in similar realms, but not the same one. Now, bear with me. This is very big test because we're testing Nikkei, and Nikkei is a Japanese market, and we're cross-validating on the US indexes, Dow Jones, E-mini S&P, Nasdaq, so completely different market. So we're still comparing kind of apple with apple because all our indexes, but completely different countries. I mean, if you can cross-validate on a different country and it's positive, hallelujah, you have a great model. So we load up, and as you can see, we can actually cross-validate with or without stop loss. I usually do without stop loss because it's a little bit harsher, and I want to see the harsher truth. If your model can create money without a stop loss, that means there's no this crutch of stop loss. There's a real edge. So I switch off stop loss, and you can see EMD fantastic, Nasdaq fantastic, ES very good. Now you need to be realistic. We don't need completely perfect smoothed out equity to have 1-to-1. That's like, be realistic, guys, okay? We just need to have this general tendency, and the general tendency is green everywhere. Now, YM is a little bit shaky, maybe YM would need a little bit of a stop loss, but overall, this is very good cross-validation. So I can compare it actually here, the last 3 years, and you can see, except for the YM, we're cross-validating very strongly on all the markets. That's fantastic. So we do have a powerful, strong edge, period. And if we summarize, so on the entire history, 100% of cross-validated markets would be profitable. On the last 3 years, 5 markets, and on the last year, now this is a little bit deceiving because I'm recording this at the beginning of January, so I think there's not enough of a sample size, so that's not that it would not work and there wouldn't be edge. That's probably still very small sample size. I think the comparison equity is way more important, but overall, really good cross-validation. So without any doubt, unequivocally, we do have edge. We do have a good model. We really have a sound model here. You see, very good. Now you can be asking, how about transactional costs? You didn't blah, blah, blah. Like, I love this question. Like, people who mostly don't understand trading, they always have to find something bad, right? Like, no, it cannot be that easy. There must be some trick. But how about transactional costs? Okay, let's have a look. So let's get back to the finalize phase, and let's see. Here we can simulate transactional costs. So if we add transactional cost $5, 10, 15, 20, 30, you can see, yeah, it's getting a little bit worse, but not much. But again, if you're skeptic and you already made in your mind, no, this cannot be so easy, you're right. Like, you're completely right. If you're an optimist who decided that it can be simple and easy, you're right as well. So you both are guides, right? Like both groups, you just choose and then you, like what's in your mindset will be your outcome. Very simple, like this. So as you can see, transactional costs, no worries at all. So yeah, here we are. Like we really do have a powerful model here. Again, the code is really, really simple. It's nothing complicated. We probably could deploy just the model itself. The model itself is already quite powerful and deployable, but there are simple tricks how to make it without any curve fitting or over optimization even better and even more viable. Now you can add your own filters. For example, you can now check day of week. That's one of the easiest one. So I can go here and I can, for example, see, hey, how about day of week? And I can see basically Wednesday is a crappy day, only $41 average trade. You see like the other one has 413, 340, 179. Friday is quite a weak as well. So we could potentially exclude Wednesday, Friday, and pretty much be done, have already great viable strategy. Or we can kind of push it into the next level and use some simple tricks without any optimization, which actually I'm going to cover in the next episode. So please, if you want me to continue and show you how to finalize it with some simple tricks, definitely subscribe. It's coming this week. And please don't forget to give a like if you like content like this. And if you want me to create more of that, even leave a comment below which markets you want me to cover. Okay? And that's really all, guys. It's simple. Do not overthink. Do not overcomplicate. Do it straightforwardly. We'll get back to this in the next episode. We'll finalize it. That's all for now. Meanwhile, happy trading and happy breakout trading. See you in the next one.